bit higher because usually we think about interest rate going by 25 basis points, and so it went all the way 25 basis point to 0.35. However, it is the first rise, and given the inflation rate and given that unemployment and employment and GDP are growing on a level that we had before the pandemic, that is a first step in analyzing getting back the Israeli economy back to normal, as it is the case going on in the U.S. and some other countries who face inflation above their target 2%.
Right. And of course, it's classic monetary economics to raise the interest rate when you have inflation, which is hurting the public. But, many people also, of course, those low interest rates help keep the economy afloat. And we know that many small businesses, for example, still benefit from those rates. A lot of Israelis took out mortgage. So how hard it's going to be to balance between keeping that growth going at the same time, raising enough to maybe slow down inflation?
But first of all, realize that even the 0.35 interest rate, given an inflation rate is 3.5, that means that real rates are very negative.
Right.
And they would continue to be negative, even if the rate would be increasing toward the 1 or 1.25 toward the summer and a little bit later. So it is a very accommodating policy across the globe. Europe is actually still having the rate in a negative area. So overall, the whole world is still in a very accommodative policy that helps businesses and consumers to take cheap loans and provide for them higher consumption and higher production. And the problems with the supply chain is because there is a very high demand and the supply doesn't really meet it, mainly in the problem of transportation on the ports.
Right. And Professor, and Bank of Israel Governor Amir Yaron, as is the want for Bank of Israel governors, reminding the public it's not all on the bank. It's not, there's inflation, which the bank can work with interest rates, but in cost of living, that also requires cooperation from the government to take certain measures. What do you think the government should be doing in tune with the Bank of Israel as it raises rates?
Well, the government in the recent budget that passed a few months ago and also in the current actions are basically have to increase competition, especially competition from importing goods and reducing all the bureaucratic and regulatory limits on importing cheap products, including agricultural products. And the main what we need, the cost of living is not the inflation,
right.
Is the very high housing prices, real estate prices, and imported prices due to lack of competition. And the government tried to do it, but it takes much more time than just raising the rate, which the Bank of Israel can do on almost 8 times a year.
And what about other measures you think the bank could be taking, that Governor Yaron could be taking? Because, again, we always have this issue with the currency, with exports. Are there other tools it has to address the situation?
No, at this stage, I think the best policy is to what we call to get back to normality, meaning raising the rate slowly, making sure that raising the rate doesn't, in fact, slow down the economy. And in particular, raising the rate may cause people to invest more in the shekel, and that made the shekel too strong, and that would hurt the export sector, but it will reduce also the prices. So the balance here is very important, and given how the market react, then the Bank of Israel will move upward the rates. And people have to remember that now, even in 2 years, we don't expect that the rate will go above 2.5%, which is still very low. And what we expect is that the inflation will slow down toward the end of the year. So then, therefore, all central banks and the Bank of Israel in particular, I expect, will be slowing down in increasing the rate in the near future.
Right. It's hard to even imagine the rates that we had going back over more than a decade ago. We've gotten so used to those low interest rates. Professor Zvi Eckstein, thank you for joining us on the Rundown.
Thank you for having me. Good night.